Hey guys, thanks for watching our next video. You may notice that in some of these videos we're in the exact same clothes and we don't release them for like weeks. And I'll let you in on the secret. It's because we film a bunch of these right in a row and we're too lazy to do a wardrobe change like they do on TV when they film a bunch in a row. So,
or we just wear the same clothes every time.
probably that one.
Or we have 6 kids and they're finally asleep, so we have to film as much as we can.
Yeah, 6 kids. Boop. On two hands now. Anyway, today we're going to be talking primarily to investors. And one of the biggest questions we get from real estate investors, whether they're newbies or seasoned pros.
They just want to get started. How do you get started?
Yeah, and the question we get is, where do you get funding, right? And we're going to do a few of these videos to talk about different ways to get funding. But today we're going to talk in particular about HELOCs. And and that stands for home equity line of credit. Now, Kristal, do you want to talk about what a line of credit is versus like a second mortgage? What's the difference between that?
So a line of credit is where you essentially pull out the equity of your home, but it's just in the form of a line of credit where you can draw from it and then pay it off, and then you have that full amount again. So you can like pull from it and pay it off over and over again. So
like a credit card.
Yeah,
right?
so
It's
we
a line of credit.
love using these for like if you're thinking of flipping a house, because then you can use that line of credit to pay for the house, pay for your repairs on a house you're flipping, and then when you sell it, you just pay it all right back. And if you can flip it fast enough, you don't have to pay very much interest on that.
Yep. And so unlike a second mortgage, you pull the money out and then you pay it back, and then you don't have that line of credit anymore. You just pay it back and then you have to get another second mortgage. With the HELOC, you can draw from it as much as you want over the course of any amount of time or however long your HELOC is for.
Yeah. So how do you get a HELOC? What does that even mean? Like what we said, it's a home equity line of credit. So if you currently own a home and you've bought it within the last 3 months, you've probably got quite a bit of equity because
maybe in the last year. I don't know.
I don't know.
The market is pretty crazy right now.
Crazy.
Which is a great time to get a HELOC because your appreciation on your house, if you own one, is insane right now. And if you bought it a couple years ago, 2-3 years ago, you probably have quite a bit of equity now. And interest rates are so low.
They're so low. Even if you're not planning on investing anytime soon, getting out your home equity line of credit and just having it there.
At the low interest rate.
At the low interest rate, and where your house is worth the most it's probably ever been. Just by having that home equity line of credit available, you have it for when you find that deal, for when you find that rental property. And you don't pay any monthly payment on that until you draw from it. So you can take out the line of credit and not pay anything until you're ready to use it. But that is how people are paying for their down payments for investment properties, rentals. So when you're a first-time home buyer, they have programs out there like FHA loans or USDA, Utah Housing, where you have 0 down to like a minimal
3.5%.
3.5%, or conventional loans that are even 5%. But as an investor, they generally need 20 to 25% down. So how do you come up with that money? And it's where you already have it. You've already made your first investment by purchasing your first home, and that has given you the equity that you can use to then go and buy your first investment property or rental or whatever you're thinking that you want to invest in.
And if you're looking to get a HELOC, a home equity line of credit, they're not hard to get, right? As long as you have good credit and you have equity in your home.
You can get one in like a week.
Exactly. And all you need to do is just go talk to your bank. Just walk into your bank, give them a call on the phone, and say, hey, I'd like to do a HELOC on my home. They'll transfer you to a lending specialist, and they'll just walk you through it. And like Kristal said, it can take as little as a week, and you can have cash available to you to go make that down payment. And if you have enough cash, you can become a cash buyer as a real estate investor, which cash talks, right?
Or honestly, lots of people who have purchased within the last, couple years or so probably have enough home equity built up to go buy 2 rental properties if they want.
Enough in down payments to go buy a couple rentals.
Yeah. And then that cash flows. If you need help finding a lender, getting in contact with someone to where you can look into a home equity line of credit, or if you've got your eye on rentals, or if you're even thinking about buying rentals, give me a call, send me a message. I'd be happy to get you in contact with lenders that can help you get started, or I'd love to show you properties and help you work the numbers to see if it makes sense.
Yep. No risk. Contact Kristal. She's great. She will walk you through all your questions that you have. But HELOCs, they're a great way to get some capital to go invest in real estate. And right now is a great time to invest in real estate because the market keeps on going up and you're building up that equity in these homes really fast. And because there's a lack of inventory in 2021, it's going to continue that direction. Experts predict it'll continue that direction for quite a while.
That's right. So like our video, share it.
Yep.
Heart it.
Comment below, ask your questions, message Kristal.
Say hi.
Okay. Thanks for watching, guys.